Oh, really? That's funny, Alex. Yep. Good instincts. All right, good. Jackson's not able to attend the class and reminded me to record it, so I wanted to make sure I did because I always forget. All right, being recorded. All right. So, let me check on something. Okay. What happened with AFRM at the end of the market there? My mom was telling me. I guess she got into AFRM as well. She messaged me just now a little bit ago and said, AFRM, whoa. I don't know. Well, look at that. Right at the end of the market, AFRM went up like 7 points. I'm trying to remember if I got, see, I had purchased some contracts. I had typed in one, and the way Fidelity is on the web interface, sometimes I can't check right now. Something's wrong with Fidelity. I wanted to just check right now, but oh well. Sometimes if you type a number you've typed before into the same order entry box, it brings up like, in the Chrome browser, it brings up like a list of previous numbers you've ever typed in that box. And I guess by accident, instead of one contract for AFRM, I actually accidentally bought 15. So I'm wondering, did I do that before it started spiking up, or did I get it at like 129? I don't remember. I guess tomorrow I'm going to have either a nice surprise or not. So that's pretty cool. All right. Hopefully some of you got some of that huge blip there. So I don't have anything planned necessarily for tonight. I'd love to talk about anything and everything that is, these classes are for theory, so we don't go over stock tickers. Stock tickers are for losers. We're going to go over theory. So this is where you learn about trading, so that I'm teaching you to fish, so that for the next 50 years, you know what to do. And yeah, Clove won't be around then, so don't worry about. We're not going to be going over tickers. No, platform specific information is really a waste of people's time. Okay, Jamal, you get an hour and a half of free training with TD Ameritrade, so you call them up and schedule that with them. And and then after that, make a list of what you want to ask me, and then maybe do a private lesson with me. But not everybody uses that platform, so it's not really a good use of combination time. There'll be like 60% of people who are going to be bored because they don't have Thinkorswim. See what I mean? So anyway, just because of that, not because I love teaching it. I've done that many times, and I do it in private sessions as well. But yeah, regarding platforms, Thinkorswim, you guys, it's truly like NASA command center of trading, and it can be whatever you want. That's what makes it so amazing. Is it's fully customizable, fully programmable, completely extendable. 100%. I've at one time I had on 3 4K screens. Let me get the number right. 128. I had, I believe it was 128. I think I had more than that. 128 symbols, charts like this per screen on 3 screens. So 400. I think it was more than 400 total charts. I might have had more than that. I think it was 144 per screen. Anyway, but that was what I needed at that time. And, you can customize it that way. There's no limit. So Thinkorswim is really the best out there. However, I don't recommend it. I absolutely do not recommend it for your first year of trading. For you're gonna have to be like you're gonna have to have like a degree in IT or something. I mean, it's a different kind of person who can start on Thinkorswim and be comfortable and make it work for them and not be cursing at it and flipping out and losing money left and right. I'm serious. And so, but if you want the next best thing, I recommend Webull. And Webull is customizable too, and it's pretty damn good. And it's also extremely user friendly. Webull, best thing in the last few years as far as platforms invented. I wish like TD Ameritrade would update their software. It literally has looked like this since I started in like 1999 with it. It's been what 23 years on this platform, and it hasn't changed much at all. They're just a bunch of fuckheads. They just will not update the goddamn thing. I mean, Jesus, 23 years. If I spent 23 years as the only programmer there, it would be like better than Robinhood and Webull and Interactive Brokers combined in TradeStation. Just me. If I was there, the only guy coding it for 23 years. So the guys are fucking morons when it comes to updating the software. It's absolutely atrociously ridiculous how they haven't updated it, and they stop. The incremental updates are ridiculous. So don't expect it to get better. Do not. It never, ever has gotten better. Ever. In fact, features have broken that used to work, and they don't work now. So anyway, don't use Thinkorswim until you're like, ready for that level of computing. It's for like build your own PC type of people. It's for people with soldering guns. Use Webull, please, instead. So because you need to focus on making money, not fucking around, dicking around with all this like stupid shit. And Webull will get you there. All right. So anyway, that aside, yeah, that made me think about that. Today you mentioned that the only lotto on Costco or Nike was 150C. No, they were different. It was 160, 150 put. No, that's incorrect. Yeah, I'll just go over that really quickly. But again, we need to talk about theory. And this goes to that. So Costco has been in a downtrend recently, as you can see there, like this. Okay. So that means that the options are mostly priced in this direction. They're priced for continuation. They have a kind of a bandwidth like this, but they have a I don't know what the right word is, propensity to rape you and take advantage in the direction that it's already going. So you can't make good money by already getting an option in that direction unless you get it deep in the money. Like if you're going to get puts on Costco, you'd want to get like, way up there instead of at the money, which is 452. So that made really good. That made lottos in the other direction really good because they'll be very cheap in this other direction. Calls, they'll be very cheap and unlikely. You see, cheap and unlikely. In the direction that's unlikely, it becomes more worthwhile. However, had Costco gone like this and mean reverted to at least 50% of the move like that, then there would be no play. You need to have an overbought or an oversold condition in order to do a lotto. Okay? You understand? And are you seeing it? I'm drawing it. Are you guys seeing it? I've probably got a little delay, but if you guys can type quick. All right, thanks. So that's on Costco why we were able to get lotto calls. Over there on Nike, we had a similar situation where we had this huge down run like this and only a little bit of an up blip. And so, but it was a couple days of follow through. And so we picked this. We picked this direction. It's sort of the unlikely direction again. So cheap, 150 puts. So should Nike have bad earnings and go down, ideally below 150 would really make us the most money. That's when you get the lotto hit. I don't think that's what happened. It closed at 153. Did it? No. Yeah, like almost 153.50. Wow. So we're actually quite a ways down to our target. That kind of worked out. Possibly tomorrow there'll be some analyst downgrades that would help. Maybe new price targets like 142, something like that, and maybe by the market open we'll actually be in the zone. If we are, then those lotto puts should pay off decently. If it goes even further, they pay off really well, considering the amount of money that we paid for them. So that's the situation, and that possibly worked out on Nike. We'll see in the morning. And same with Costco. Do you understand now, PJ? That was for PJ. Right. So let's think about what you'd like to learn about. And go ahead and ask. And I'll try and cover it. Last week we did a lot of pivot point analysis, trend. I gave you the foundation of trend, analysis. And remember, we were talking about, I think it was last week, or maybe it was the week before, but I think it was last week. We were talking about how, if you're driving north and then you drive south, if you turn around and drive north before you started and go past the point in which you just turned around, that you're still driving north. Do you remember that? And we were driving that. And we were talking about migrating birds and all that kind of stuff. So we've already talked a lot about that. So let's see if we can cover something else. What are you using to see if it's oversold? My eyes. Okay, and that's what you're going to use. I'll answer that question really quickly. This right here would be a overextended run, right? So that'd be overextended to the upside. Then Costco came down, and so now it's extended to the downside, maybe oversold. That whole run right there, that's what I mean. Instead of versus, like if it's going to give you some kind of choppy moment like this, then that's not going to be oversold. That's going to be in the middle. It's not going to be overbought or oversold. Okay, so let's see if we have some other questions here. What's the difference between a mutual fund and a stock? A mutual fund, okay, think of it this way. A mutual fund is literally, let's break the word down. A fund is like a money pool, right? Following me? A fund is like a money pool. It's like, hey, let's create a fund, and you get your friends together and you put it together. A mutually beneficial one is where everyone gets paid based on how well that fund performs versus like a charity fund, right? So a mutual fund is one where everybody puts money into it, and then there has this like one manager or a couple of traders and a manager, and they do stock trading or buying and selling of stocks or real estate stocks, or even could be actual real estate and or other stocks that invest in real estate. And so it becomes like a basket of other stocks. So a mutual fund is a collection of other stocks, but it's like a partnership, and you're putting your money in and you're going to get your percentage of the partnership back in return. But they don't actually give results. They don't typically give very good dividends. You make the money in appreciation of the mutual fund stock price in general. So like an index like SPY. I'm not sure if SPY is considered a mutual fund, but it basically is. Okay. Let me put your guys' chat over here. Hopefully that doesn't put it in the view. Let me YouTube. No, I don't think it does. I mean, I have to wave my hand because I can't quite see YouTube. When do I wave my hands? Boy, there's a lot of delay. 20 seconds. I'm just checking this. There it is. I just waved my hands. Wow, it takes a long time to get to the YouTube recorder. All right. So hopefully that answers your question about mutual funds. Yeah, but see, Jorge, people don't understand things like that. You would not be a good teacher. It'd be funny if Jorge's a teacher, wouldn't it? When you're explaining something to people, this is what makes me a good teacher. And if you want to be a better teacher, listen up. When you're explaining something that they don't understand to people, do not use packed terminology. Okay? They don't understand what that means. You can't go, yeah, net asset value of the fund. They don't know what the fuck that means, man. You have to break everything down. All right. Let's see. So where did you ask that question about the mutual fund? There it is. Okay. The head and shoulder neck thing that you showed today, but your mic cut out. Can you give a detailed lesson on that? I did last week, Mike, but all right, Jorge. I did last week, but yeah, I'll show it again really quickly, okay? Because it's pretty useful. So today we got that on what? It's on you now, Mike, to come up with the example. You brought it up. What was that? What was the stock? We traded a couple things today. BRLT, did it do it? I don't know. Do you remember? Excuse me. RNAS, maybe. I think RNAS probably did do it. Let's pull up RNAS. All right, so we've gone over before why we get into stocks when they break their pre-market high if the pre-market is going bonkers. Okay, now we're in it. We're in whatever trade that is, right? And let's see here. Okay. Let's get a really good example here. All right, a good example. So it kept running and it kept running and it kept running, making higher highs. Went up to this level here, right? Okay, you gotta follow along with me now. Started to come down. Okay, and then started to go back up. Okay, and then faked out. So it broke out of here, but it wasn't real. It was like a split second long. So this, okay, you need to identify this. Ready? This right here is a retest of the high. At that retest of the high, okay, it's a retest of what high? This high right here, right? At that retest of that high, was it a breakout or fake out? That's what you need to become an expert at. And God, it's not hard to, right? I mean, I think almost all of you can walk away tonight an expert at knowing whether or not a retest of a high is a fake out or a breakout. So I already told you what the answer was a moment ago. It's a fake out, right? No follow through. Sometimes they can, do that. They can just kind of like have a little bit of a tension there around that area, go down a little bit, and then get some support, and a couple minutes later, maybe even as much as 10, 15 minutes later, and then they continue. But here's the thing. Either way, whether it takes a long time or a quick time, you need to identify in your mind, oh, that was a failed retest turned into a fake out, okay? It's not a full failed retest, but I'm just going to call it failed retest, fake out instead of breakout. It's nice that it rhymes. I think in French it's probably something else. Excuse me, guys. I'm going to take a cough drop so I can talk better with you guys. I'm on the 2-minute, and it really doesn't matter though. Okay, for this example, this is theory. It works on any time frame. That's aside the point. The delay is crazy. Oh, really? Oh man. Okay. So now what you got to worry about when there's a fake out and a failed retest is retracement. That's the next thing you need to think of. Maybe you should have a piece of paper, because step 2 is to start watching retracement. And step 1A or 1B rather is, okay, failed retest occurred. It was a fake out. Instantly, you need to switch to defensive mode. Okay? Think of it that way. So you were in offensive mode before. You had no worries. I mean, you were worried and concerned, but the trade was working. There was no signals, no signs to put you on the defense. Therefore, you're in offensive mode. What do we do in offensive mode? We're looking for profit targets. When we're in offense mode, we're looking for profit targets and raising our stops and setting our stops to break even if need be, raising our stops, progressing the trade in a profitable favor. Roger that, everybody? Understand kind of like what the things what we're going for when we're in offensive mode? Yeah. Cool. Okay. Because there's going to be a difference here. Now, suddenly failed retest happens. Immediately, you need to flip to defensive mode. That was like a nice little gay thing. Shusha, like a living color. That's an old soul for you guys. So you understand? Like immediately, it did something bad. Failed retest, bad. Be on the defense all of a sudden. Switch to defense. Yeah, the Z snap. Switch to defense. Okay. Now that you switch to defense, these are the things you're going to watch out for from that moment forward. Retracement. Okay. And what I mean by that, what you're going to do is start measuring it. I should say this. Whenever you go into defensive mode, you instantly go into de-risk mode. It doesn't mean you start to de-risk, but when you're in defensive mode, you're not in take profits mode anymore. You're in de-risk mode. See the difference? So on the offense side, we're taking profits, we're raising stuff. It's a whole different game. It's a whole different game plan. We're taking profits, we're raising stops, we're raising our stop to break even, we're watching pivot points, we're checking the quality of things, we're monitoring the strength of everything that's in our favor. The moment that we get that failed retest, you switch over to de-risking mode and defensive side, and now you focus on de-risking. You're trying to look for excuses to de-risk. And it's, in my opinion, this is the methodology that you should learn, that if we get 50% retracement from that low, which we're going to call the neckline, by the way, if you get a 50% retracement to that neckline, go ahead and take off 25 to 50% of your position. Okay? So I'll write that in here. 50% reduce 50% retracement, reduce 25 to 50% of your position. Everything's always kind of like on a sliding scale. There's only a couple things that are absolute. Everything's always stochastic on a probability curve. So this idea of reducing 25 to 50%, in different situations, it can just, you'll see, you'll be like, I'm not too worried. And in another situation, you'd be like, oh my God, I'm cutting half. So you'll get good at sensing that. You're a human being. You're going to be good at sensing risk. Now, the next thing you want to watch out for is if it ever breaks the neckline. And that's this right here. The neckline is this, the low point of the pivot back there that it recently went up and tried to retest the highs from. Okay. Now, if it breaks that low point, let's see, I'm going to write that in there. Number one is called the neckline. Oh, yeah, it's being slow. Are you seeing everything? Source waves say what? What is that? Okay. The neckline. Now, if the neckline breaks, it breaks. We call that break. It broke down. It breaks down. It's breaking down. It broke down. It broke down a pivot. That's an important pivot. We can call it the neckline. It breaks down. That equals exit all. That's an absolute exit. And look, amazing, right? It went on to continue to deteriorate. I remember somebody was saying, ooh, RNAS is starting to happen again. It's not going to happen again. This is just a pullback and a downtrend, as you can see. Continue to make lower lows. Don't be fooled by that. Can somebody tell me when they would get excited again about RNAS? At what point? Breaks a new high. That's pretty much the one you got to watch out for. Okay? Except in this case, and I think Sergio and Alex, a couple of you guys who've been with me for a long time, who are really getting a sense of this pivot stuff, you could see that if you broke this point, actually, that it put in, that would be an erasure of 3 progress points to a downtrend and probably put it in a good position to potentially go back and retest the high again. That's all you have. So it's possible, though, that you could get in right here, and look what happened when that level broke. It was just like boom, straight up, right? And that is why that happened. This is all logical. The theory of pivot point trading really works. It's pretty incredible when you see that stuff and when you're able to break it down like that, because it's like every day this is happening across every stock in the entire stock market, and it's working. It's like, whoa, it's amazing when you start figuring this out. So that is the failed retest breakdown pattern of getting out. Okay. Now, before that point, your exit, your stop loss for exiting all would have been right here at the low of this level. It would have been down here. Okay. Without that pattern, that's where your stop is. Without that pattern happening, that's where your stop is. And again, this is the pattern. I'm going to make it in pink and in very bold. How do I make it big? Okay, cool. This is the pattern. Try to retest the high, comes down 50%, breaks the neckline. Kind of hard to see. Let me get a different color here. Cyan blue. Okay, let's try it. Goes up, comes down, and breaks the neckline. That's it. It's a little inner trend trading pattern. The major trend is still going on out there. The bigger trend going on is roughly something like this. Okay, what happened here. Let's see if I can do like a little highlight. That might work. Yeah, what happened here was it's an inner trend. You understand how it's a lesser trend. It's a minor trend. There's a major trend, like a big thing going on. Like this is still making progress, overall over a long period of time, RNAS. But in a short period of time, there's like smaller little trends going on, right? Little scalpers and flea bags are in there trying to get their little money. The fleas on the dog. And then there's the bacteria on the fleas. Everybody's trying to make their money at different levels of stepping, right? And then there's investors who are getting in today for 7 years. So this is a trend strength that's smaller than the overall trend strength. So you got to keep an eye out for it happening, because it can kind of surprise you there. There was another stock that we saw it on. I'd love to give a second example of that while we're on it. But do you guys understand that now? Any questions about that? So inside the neckline would be anything above the V. Yeah. What? Inside the neckline. Yeah, okay. All right. I think you understood it. All right. Let me take a look at the other one. I think it was BRLT or something else that we traded today. Did you guys like that? That's like it's an exit signal. It's something you should have in your tool belt to understand. I'd like to go to see another stock so we can identify failed retests again. Inside the neckline. No. Above the neckline. We broke the neckline. Maybe the stop is trading right around the neckline and inside the no, I would never say inside the neckline. But okay, it doesn't matter, right? BRLT. Yeah. Let's see over here. So over here, we got in this trade at really good, way down here. I think at 14. Let me get rid of that and turn it white. We got in this trade, I think it was like 14.01 or it could have been 13 something, but let's roughly right around here, okay? We got in right around there. Now, then it went like this, right? It went and it made a high, okay? And then it pulled back, okay? And by the way, when I'm watching this trade, I'm thinking, how much did it pull back? What would you guys say? What's the percent retracement there? How strong was that pullback? You measure these things. What's the percent retracement on that pullback? Let's see a few more answers. Hey, Troy. I didn't see you in the group today. How you been? Yeah, Patrick, good. Yeah. Well, you know what? We can actually measure it. You can get tools and measure that, but to my eye, I would call it like 40%. Okay. Are you making sure that you're measuring it from the bottom down here all the way to up here? But how do we get 40%? Okay, look, let's measure it. Do we have a measuring tool? No, that would be awesome. But there is one built into Thinkorswim. I've modified it, so it's probably not going to be perfect for us, but we'll try. Okay, cool. Okay. This thing. Oh, I hate I hate Thinkorswim so much, but that's why I have to use for life. It's my eternal damnation. Okay, so look, when I put the measurement on there, you can grab this percent tool, and you won't see it very well, but from the low all the way to the high, and just so it will make a line all the way across, I'm going to cheat it by just like making it go all the way across. Okay, that's the 50% line. Do you see it? So I think somebody said 47%. You're pretty close. It's like 45%. Yeah. Okay. All right. So anyway, the point was you should kind of always be measuring those retracements because anything more than 50% is worrisome. Okay. It can pull back 60% and 70% and then be fine. It's just it's less healthy. Okay. It's less healthy. It's worrisome. It's concerning. It should start to maybe make you think about, we're getting ready to de-risk and be on the defensive. So that kind of stuff. Okay. Here, we're okay. We're pretty healthy. Now, then what did it do? It then moved up here, right? And what would you call that? What vernacular, what term have you heard tonight that you think you might call that when price is going all the way back up to the high? When it's going all the way back to the high. At least she has it. Eric has it. That's the word I'm looking for. I'm looking for a retest. So we retest the high. Why is it not a fake out? Can somebody answer that right now? It's not a fake out. Can somebody answer why it's not a fake out? There you go. See, Eric said it. It didn't break the high. You understand, Richard and Mike? It's not a fake out because it didn't break the high. A fake out is a breakout that doesn't follow through. Okay. So what we have here is what we would call, and then it went back down. Like we're not even looking at the further along, but that was a retest of the high, and then it went back down. And we can now classify that as a failed retest of a high. Retest failure, failed retest of a high. So at this point, you do what? If something like that happens, what do you mentally do? Go on the defense. Perfectly said, Mike. Go on the defense. No, you don't de-risk yet, like as a verb, but you go into defensive mode. You go on the defense. You don't de-risk yet, though. You go on the defense. Okay? All right? You moved from being happy about the stock to now being concerned, and you go on the defense. You're not worried so much about taking profits anymore as so much as looking out to get out. Okay, so it failed to retest, and now when it went underneath this bar, or really, up here with this highest bar, okay, right here, that's when you can like definitively say that it's coming back down in terms of pivot drawing. Okay, in terms of drawing the pivots, that can help you understand when price went underneath the previous candles here. That's when you know it's not just messing around and maybe still going to progress. It's now gone below progress. Okay, you with me on that? You understand? It's gone below previous progress. Previous progress being higher lows, right? So it was in an uptrend. It was moving up. It put in these low points right here, and then that little arrow that I drew right there, the price starts to go below those. So that means all I'm saying is that means that you can definitively be sure that that high point up there was the top and that it's now coming down. You can consider it like you're drawing down, okay? And that top point was a pivot point. Okay, so it defined the pivot right then. Okay, so then you're looking for, if it breaks 50%, you're on the defense and you're looking for retracement, right? Like pop quiz, I should have asked you. What are we looking for after a failed retest or a fake out? We're looking to start watching the retracement. If it were to break down 50% retracement, what would you guys do? And right here, what would you say it did? Like what would you say that retracement was right there? You can see me drawing that line. Let's test your retracement guessing. Yeah, I think so. Yeah, I think it's like just about damn near right before 50%, right? Let's grab the retracement tool again and put one there and let's see what it says. Technically, it's even a little bit lower. But, just use your eyes. If it feels like a 50% retracement, it's a 50% retracement. And so then it goes back up again. Okay. It goes up again. What is it doing when it's going up? What is it trying to do? Why go up? What's the goal? Why go up? What's it going to do? What is it trying to do? Retest. Eric, way to go. It's trying to retest and break the high, right? Okay. And this one that it previously failed the retest on, was it at the exact same level as the previous high? No. It was a little bit short of it, wasn't it? It was a little bit short of it. Okay. So it wasn't too bad, but we could call it, a little bit sucky. It didn't even get all the way up there. Now this one didn't even make it up to that one. I mean, wouldn't you call that weakness? Yeah. So now it failed to get up there on this other time, the second. So it's a second failed retest, except it's like an inner retest. It's like it's failed to retest the retest, right? Which is just another sign to you that the trade is falling apart. And then sure enough, eventually here it breaks the neckline. That's the neckline, okay? It breaks the neckline and then it starts to peter out. From that point, it struggles for a while. And you cannot be sure that when it broke that neckline, it wasn't going to just crap out for the rest of the day. How many of you have seen a stock do real well like that for just one run, first 10 minutes of the bell, pulls back, tries again, but can't do it, peters out, and just craps the fuck out, like just so hard, and starts going red, and then goes red on the day. It's red for the rest of the day, and it's red. Yeah, a lot. So are you going to hold through the break of the neckline? Are you going to look at this and say, but it didn't really fall that much. If I stayed in, it would have went back up here, Or are you going to follow the rules and get out when you should when it breaks the neckline? I think that if you don't have enough experience trading, you're going to learn the hard way that when these necklines break and these little failures happen, it's very bad for the stock. It irks traders the wrong way. So all the people who want to buy up a stock, because it's all supply and demand. So all the demand that was there, would you say that 100% of the original demand is now going to be interested in this stock that it just did that to them? Or can we agree that at least 1% less than 100% of the demand that was there before is now pissed off and doesn't want anything to do with that stock anymore? So if you agree logically that it has to be less demand because this happened, then to some degree, this stock is now going to not have as much steam as it had before. It's just connection of logic dots like that, right? It's pretty simple. So that's why you get out. And let's say it's only 1% traders that got burned. It's less, but probably realistically, it might have been more like 25% of traders got burned, maybe more, maybe half of everybody got burned. So they're going to be like, I'm not getting back in that again. Or maybe they got burned so hard they don't even have money anymore. Some of these traders that was their last trade, or that was their last amount of money. They risked it all and they're out. There's just going to be, by sheer logic, less demand moving forward now. That's a problem, So that's why you get out. Okay, but that was the pattern again, and that's how that works. And as you can see, had you stayed in, it only moved on to fail retest again. It failed retest again, but then it like 75% retraced, bounced around, failed that failure right here. So it's just like such a pain in the ass, right? So many failures. And then it put in this higher low over here, which was higher than this low, which was higher than this low. So overall, it's kind of creating a wedge. Let me draw that for you so you can kind of see that. There's kind of this wedge forming, okay? And then eventually it may break to the upside, but only because there was a wedge there. It's sort of like a technical breakout. It wasn't like everyone was like, oh my God, this RNAS, you have to get in. I don't care if you got burned before earlier. This is RNAS, man. You need to get into this. No one cares. It's just a little micro flea bacteria, day trader, scalper, technical wedge breakout, and it's not going to last. It's going to fail. You should know from all the action and maybe watching it throughout the day and being in it and seeing how it behaved that no one's really genuinely interested. They all just are going to sell once it pops a little bit. They just want that technical breakout and then they're out. Why didn't that draw? Does that make sense? So, and that's why, it's bullshit. And probably tomorrow it's just going to go red on the day, because that was not the right texture for a great run. This was bad. A little bit of failure. And stocks do much worse than that, as you know. So trying to learn all the rules, but following them as I learn them. Is that a double head and shoulders? No, don't worry about any head and shoulders talk. Forget about that. Don't get stuck on that. Head and shoulders is just exactly what I just said. It's a failed retest. On a swing trade pivots, do you only use day chart to minimize noise? Yes. 30-minute chart? No. You see more pivots the more you're zoomed in? Yes. But I don't. How far zoomed out for overall trend trading? For swing trading, daily is the absolute only chart you should ever use. With like just very rare exception. I could think of maybe 1 out of 1,000 rule for an exception on that. Very rare. When you're day trading, it's a totally different game. You're going to use the day. I'm sorry. When you're swing trading, it's a totally different game. You're going to do all of your analysis on the daily chart. Every candle's a day. That's what you're dealing with on Costco. This is so now based on this being the neckline, how do you guys feel about Costco being down here? Based on what I just taught you about in day trading and intraday trading, this stuff also works on these daily charts. What catches your trading mind now? That's funny. But why? Okay. It's not drawing it for you? Oh my God. I have an arrow. Do you see the arrow? Arrow? Okay. There you go. Jer said it. No. Jer got it. It's more than a 50% retrace. It's almost 100% retrace. It touched the bottom there. 100% retrace. That's a lot of weakness. And for those of you now who understand the heads and shoulders pattern, Now you can see why the heads and shoulders pattern happens the way it does. So like the next thing it might do is go up here and then fail to make a higher high, come down, break the neckline, and then break down. That's not what's going on with Costco. It seems to have good earnings. I don't know. We'll see tomorrow. Maybe this head and shoulders pattern will come to reality, but that's regardless of the theory of the trading here. Oh, really? Let's see. AFRM. What's this a good example of? Who said that? AFRM today is a great example of breaking the second retest of the day and then breaking the all-time high. Kind of. See what happened here? It's interesting. You would have stayed in this trade. This trade from pre-market, let me see the pre-market. Okay, so that green line represents the high in the pre-market. That's not what that green line is normally, but it's just coincidence. So you would have gotten into this trade here. And this would have been your risk, your stop. It then proceeded to pull back right away, right upon break. 50% retrace. Breaks out even further. That now becomes your stop. You might have exited right there, possibly, depending on how you babysit this pullback right here. Was not looking good. It didn't have a failed retest, though. So you would have still been on the offense all the way down to the bottom of your stop. Hard to say whether or not you would have stayed in there. But if you did, you have two other things that could happen. Is you could have got in on the rebreak over here, or you could have stayed in. So in either way, the trade continues. Breaks high there, so now the stop is down here. Back, breaks the high right there, so now the stop is over here. Pulls back, breaks the high again right there, so now the stop is down here. Pulls back, breaks high again right there, so now the stop is down here. Pulls back, you're staying in this trade this whole time. Pulls back, has a little bit of a failed retest right there. You worry. It does about a 50% retrace, but then it does break the high. And so you move your stop to here. It then pulls back, kind of fails a retest right there. So you might be on the defense now. You might have de-risked at the 50% level, right around there, 25% or 50% of your position, but you're still in it. See, the stop is right here, and you're still in it, all the way up there, all the way to the end of the day. So that's interesting. Where did you get out, Benjamin? Yeah, I mean, you need to learn pivot point trading because that was clear as day, kept you in almost the entire day. Right? I mean, now that you analyze it, 25% to 50% de-risk possibly right there. That's the only, oh, well, there was two. Let's mark this up just a little bit. There's potentially re-entry right here on the breakout, and there's potentially stopped out right there. But other than that, that's smooth sailing. Yeah, the first one. This one stopped. This one way down here at the beginning of the day. Yeah. And even then, I mean, it was above this stop. And yeah, personally, I'd have to see it in live time, but I probably would have stayed in because I don't sweat those stops like that. Give them a little bit of room. I need to see like precipitous drop action. If it was fighting up, down, up, down, up, down, up, down that whole time, I likely would have stayed in right there. And then 2 chicken to get back in. But as you can see, that's exactly why the signal works. If the price can break the previous high, that is enough demand and momentum for it to then continue. And that's why we take those signals. And if it can't, then it won't, and you don't. You see? So it's already built in for you to save you, and it's already built in to make sure you make money. So those signals on those re-breaks, if there's a lot of hype about something, and you're hearing in your ear everybody's talking about AFRM, and this thing starts climbing again, and then it works and it breaks out, you probably should get in. Like, all eyes are on AFRM. It had to be one of the top 3 stocks today, maybe top 5, top 3. So don't chicken out. Roger that. What will be the difference between a retest and a pullback? So a pullback, there are pullbacks. A pullback is when the price comes down after going up. So this is a pullback. This is a pullback. This is a pullback. Are you guys seeing these as I'm drawing them? This is a pullback. This is a pullback. Okay. Like, I'm just going to do it a million times. So it's just like, really sets in your brain. Okay. Because then I'm going to switch over to the other one, and you're going to notice the texture of the difference. So don't think this is, doing this a lot for just to be stupid. No, these are all the pullbacks. Okay. Those were the pullbacks. We kind of say that this is definitely a pullback right here as well. Now, let me draw what did you say? Difference between a retest and a pullback. Okay. And now here are the retests, and I'll draw that in pink, a thick pink. So now I'm going to draw retests. Ready? That's a retest of a previous high. Okay. And then, of course, there's a retest until they break as well. So this was a retest, this little moment right here. This was a retest. This was a retest, but they didn't fail. They worked. They weren't fake outs or failed retests. They were breakouts. Okay. This one, however, was a failed retest right here. This was a failed retest because right after it touched the high, it started to pull back. But it was 7 minutes later, it broke and continued. And it didn't even 50% retrace. You would have been on the defense, but you wouldn't have taken any of your position off the table. So anyway, continuing with the pink there. Don't change on me. That's a retest to there, and then it broke. Now here we go. Here's a failed retest right there. Failed retest. Are you seeing these now? Do you understand the difference? They're very different. A pullback, white stuff, the white arrows, and the retests are these pink lines that I'm drawing. And then here's a failed retest right here. And that's about it. Oops, where did I go? What happened? Oh, Marcus, you came up on the screen. Marcus, where is your video? Oh, there we go. Stop video. Okay. Did that make sense? Whoever asked that? The difference between retest and pullback? Do you think you understand now? Who asked that? Tarun. Do you think you understand now? Oh, Tarun, you said some more. In the morning, you were asking questions during the live session. Question was, which direction will be pullback if a stock is going down? The answer was up. Correct. That's why I'm confused, as now on the chart you're showing pullbacks only going down. Yeah, because this is an uptrend, Tarun. Pullbacks in an uptrend are down, and pullbacks in a downtrend are up. Which way is this stock going, Tarun? Right. In an uptrend, a stock that's going up, pullbacks are downward. Follow me so far? Now, if this chart was red and the stock was going down, pullbacks would be which direction? Now, if this chart was red and the stock was going down, 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 pullbacks would be in what direction? Oh, yeah. Yeah, up. You're right. You're right. You're right. You're right. Good for answering it correctly twice. Yes. Okay. So now do you think you're not confused anymore, Tarun, though? Do you think you got it now? Does that clear up the confusion you had about the earlier thing? Because what did you say? That's why I'm confused. Is now on the chart you're showing pullbacks going down. Does it make sense now, looking at this green chart, that these pullbacks go down? Like, does that totally logically click now? What would a fake retest look like on a stock going down? Let's see if there's something that was going down all red today. It's a good question. You could probably do Sovo here. Yeah. So Sovo started trading today, and nobody wanted it, and people who were in before wanted out, so it went down all day. So this right here, let's draw some pivot points here. Okay, so I'm going to draw in pink I didn't do it in pink last time, but all right, I'm going to do it in pink this time. These are the pullbacks. I don't know if you can see that. I should have made it a thicker line. This is what you would call a pullback in a downtrend. And it is, in fact, like you said, 3 times going up. So the pullback in a downtrend is up, and the pullback in an uptrend is down. Crazy as that, I know it's a little bit crazy, but yeah. So these are the pullbacks. And then you said, what does a failed retest look like to the downside? And I'll switch over to white again. We have one right here. It tried to make a new low, failed, came up a little bit short, see, a little bit short. And then it went on about a 30% retrace for a while, about a 50% retrace there, and almost a full 100% retrace to try to shake people out. You probably would not have gotten kicked out at that moment, possibly if you were babysitting the stop. Then it went and proceeded to try and retest lows again. I'm going to try to draw these here. Tried to retest these lows again, but couldn't even make it all the way down. Just couldn't do it. So you're like on hyper defense now. It goes and it makes a pivot there. That's almost 75%. tries to retest again and fails to make that low retest. Comes up, and this is where you probably would cut it, at that V neckline, that inner V neckline right there. That's probably where you would cut your short position if you were trading short. And then it proceeds to do this, which was some kind of bullshit apparently. But I didn't trade that stock that day. But there you go. And there's another failed retest right there, which eventually breaks out, what they call breaks down. And break down in a short trade is what you want. So it's a positive. Breakdown is a wonderful thing if you're short, but you're not in the position anymore anyway. But I'm just showing you the trade all the way to the end here. All right. And so that would have been a breakdown right there of these levels, but it never ever did get any lower than that low of the day. And you can kind of see, I can, not sure how many others in the group yet can, maybe Sergio and a couple others who have seen these charts a lot. You can kind of see how since this failed retest here, all the movement, all the price action has been messing around with those last two important pivots. This one, or maybe you could even call it this one, and this one. It's just like a cat playing with a mouse, just all around in there. It's all meaningless. It's not changing or progressing the trade. It's not going in the reverse. It's not going down. It's just a lot of meandering this or that around. It didn't change anything. It's interesting, it's interesting because you can break down the entire day's trade, when it comes down to it. If you have enough analysis skills with the pivot point trading, you can break down this whole trade, right here, this entire day on every stock on the entire stock market. You could do that. Once you get to the point where you can draw these pivot points. I mean, I think Benjamin probably, when we last met, I said, homework assignment, practice drawing these lines on charts. Just practice drawing them out all day, every day. Make these pivot points are so important. And some charts are going to be gnarly and difficult, and you can skip those, frankly, in the beginning, okay? And other charts are going to be easy. Like, let's look at today, maybe XLI, okay? Just to look at just pivot point, drawing pivot points. XLI today. So there's XLI made a lot of progress today. And there are some important moments and some, not important moments. When you're drawing pivot points, you got to get good at sort of noticing that. There's a little bit of a failed retest there, but it kept going. Came back down here, and thank goodness, because that's where the stop is at that point. Keeps going. This right here, hard to say how much you count that, because look at how minor that is in this whole trend strength. It's hard to say if you count that or not. If you do, you raise your stop to here and you would get out here. If you don't, your stop is still down here and you're still in the trade through this little momentary pullback. But then it continues on, and with this much entrenchment, retracement, you should raise your stop and count that particular low moving forward. So that becomes the new stop. It basically hangs out there for a long while, makes some more progress, pulls back a little bit, really a negligible amount. I would not be raising my stop yet. The action just doesn't call for raising the stop yet. You need that nice dip. You see this valley right here? You really need a good valley like that to raise your stop. That's why we were able to raise our stop here. That nice valley. That's why this one was kind of questionable. and your stop probably would stay over here until that moment. So analyzing it further, then it comes down and eventually breaks this stop that was in there by like the end of the day, like at the very end of the day. So overall, so just do that. Just like analyze stocks like that, draw the pivot points, and the thing is, certain stocks will trade in such a way that it's just easy and a beauty, and other stocks will trade in a way where it's like, damn, it was difficult or it's frustrating. You feel like you got knocked out. You wish you could have did better. And no, don't beat yourself up over it. It's just that's the way it traded. That's the name of the game. That's how this game is played. There's not much more you could have done to mitigate something that didn't draw in a way that you would have loved for it to draw. But one of the things we do as day traders in our strategy to make sure that we don't lose opportunity when these things go into the zones is we take profits at every dollar level or every key level or key price levels. And so that way, even if the trade goes against us and then we have to stop out, we actually already made some money way up high. Yeah, for a day trade, Tony. But technically, some of this would work on day charts as well. Benjamin says, funny how tough it is to learn. What? Put trending? I'm not sure what you meant there. After talking about call trending. My brain. Oh, yeah, upside down. Yeah, I understand. Yeah, it's a pain in the ass, I guess. Get your mind to flip like that. But, the ones who are going to do better at this are the ones that push their minds. This isn't fucking easy, right? It's not easy. Does anybody feel like this is cake? Or is this, tough stuff? Was this a lot to learn? Not just what I'm teaching you now, but I mean, like your journey so far and learning how to trade. Is it much harder than you probably originally thought? Is there a lot more to this than you probably originally thought? Is this a lot harder than you originally thought? Did you have delusions of grandeur at the beginning? You know what I mean? Yeah, no, this is as hard as anything, and you can make it, and you can go down and as deep into the levels as anything. You could get so far as to be a pioneer. People write books about things that has never been observed before, patterns and or a certain order flow or whatever. It can be anything. So it's up to you to the amount of money that you're going to make, the consistency you're going to have is going to depend first and foremost on discipline. Okay, because if you just what's a good example? If you are learning to surf, I think this whole surfing analogy really works because there's waves and you're waiting out there to ride the wave, and then if you pick a wave that sucks, you're going to get a low score, right? But if you pick a wave that's really good, you're going to get a great score. But there's nothing you can do as the surfer to change the wave. You're not going to change that wave. You can only take advantage of what the wave gives you, right? To get what you get. But what I'm saying is that if there's going to be days where you take a jet ski out there, or you're going to do body surfing, or you're going to, I'm trying to think of a good analogy here. Scuba diving. If there's going to be days where you're going to try scuba diving, body surfing, jet skiing, snorkeling, guess what? You're not going to have a consistent fucking surfer record. Okay? You're going to screw around with shit. And plus you're going to have to spend $15,000 on a jet ski. And so now you're down on your surfing results. You know what I'm saying? So I'm kind of trying to say, if you want to get good at surfing, just surf. Just do it. Just surf. You know what I'm saying? Is stick to the one strategy. Don't go off testing. Don't. I should probably create a rule on this, for the group. But listen, if we had to put it into a rule, the rule would be this: don't ever, ever, ever try and do something that has not been tested for at least 30 years and passed down to you by mentorship or in books as a winning strategy. Don't ever, ever, ever do something like that outside of what you're doing. You have to have the discipline to stop fucking around, because you will, don't do weird shit. It's exactly what I'm getting to. You will venture off into R&D land, trying out some little idea you had, or maybe you heard something and, oh man, that dude made a fortune off that, and he gave another tip, and I'm going to go do that. And guess what? That is going to kill your consistency. You have to pick it. You've got it. It's going to be boring, but you have to pick your oeuvre of trading and do it consistently forever and never, ever, ever, ever venture out of that circle, ever, ever. And if you want more variety, you pick up something that's been time tested for at least 30 years in hundreds of thousands of trade by multiple traders, winning traders, in books, passed down for generations through mentorship, and you add that to your trading book. Don't go trying some stupid one-off thing that you have an idea for. You're gonna set yourself back. Like Jackson did some little. He had a little idea. He gave it a shot, and now he made one mistake, and he's 3 months set back on his bankroll in progress. You can't make 1,200% a year if you make 1% every day, and then one day lose 35%. It won't compound. It's not going to work. You probably will never even get back to the highs that you had before. It won't work. It won't compound. Don't do weird shit. Oh God, forget MACD. Skinny dipping. Yeah, there's another one. And there's sharks. That's right. Sharks. Right. I should probably incorporate sharks into that analogy somewhere. You get what you get and you don't do. Yeah. I can finally join the classes. All right, Pablo. Do you buy more stocks or options as the trade progresses? Do you buy more on pullbacks? So this is more for like swing trading, I think, is what Pablo's asking about. Although even in day trading, sometimes we do top off or rebuy or second chance entries. But yes, you can do that. So, but it's a little more complicated, just a little bit. So it's just a little bit of extra math in it to make sure that you aren't over risking your account. So this is how it works. So let's say we have a day trade, like, I don't know, we had something really nice the other day as an example. I forget what it was, but maybe, no, not Target. Let's think of some really great trending stocks, you guys. But I need them to be like channeling more and bouncing around. But anything that's been going up, trending up for a long time. No, for a long time. No. V. No. Yeah, just keep feeding me stocks, guys. We'll find one. Keep thinking of some. Hive mind. Let's hive mind this. Good. Microsoft BX. Microsoft. Maybe I zoom out. Okay, yeah. All right, Microsoft. I think we're good. Let me take a look at some of those other ones you said. Wish. Oh my God. No. Asana. Not the best example. Okay, so look, Microsoft. Okay, so the question Pablo asked is, let's say you bought a stock and you're in a swing trade, and you bought shares. Okay, which is a good idea to buy shares when you're doing. It's a good idea to buy shares in everything, man. So, but Options can kill you. You really need to know what you're doing with options. So anyway, one of the places you would have bought Microsoft here in this particular chart, let's assuming it was an in and uptrend, was when it broke right here for this amount of risk. Okay, and there's in my market mastery, I've taught this before in some of these classes, and it's been cut up and edited. In there in the market mastery are some lessons on like about all that risk and stuff, like what I'm talking about. For some of you, that might be a little bit new, but this is your risk down to the stop right there for the trade on Microsoft. Now it progresses like this, roughly. And then it breaks another high up here. You have to make sure that roughly, Pablo, you have 2 risk units of gain. This risk unit here. You have 2 risk units of gain between when that happens and that new breakout, if you want to call it that. And then you can enter there. You can double up now. You can add to your entry, okay? But when you add to this entry, the risk on this is much bigger, see? Much bigger. It's to the bottom of that pivot point, but that's neither here nor there. That's a second independent position that you added on, okay? So if you're following, okay, then it pulls back a bit. It goes up really high, right? And it broke again right here. You could have added on there, but no, not in that case, because it's that rebuy is not beyond 2 of the previous risk units. Okay, so it needs to have gone up beyond about right there. By my rough eye. You follow me? Because that's 2 of those risk units right here on that last trade that you got in. And the reason for that is so that these gains are paying for the new risks that you're putting on in your portfolio by doubling and tripling up. Is that starting to make sense, guys? These gains are going to cover the new risks that you're putting on, such that if you got stopped out, you still would not lose more than 1%, which is amazing. You tripled up and yet you still would not lose more than 1%, because now your stop is over here. You see it's been raising. It was here, then on that next breakout and second rebuy, it's now here, and then on the third breakout, by the time you could get in, which is roughly over there, it's up there. So stop is raising every time. And so you don't want to get triple committed in such a way that, if this comes down and it stops you out, you will only lose 1%. So you have to do a little bit of math on that. And I don't suggest you get in up here. Okay? Because this risk would be fucking huge. Yeah, you don't get in up there because it didn't break out of an all-time high. Right there, it just met the requirements of being more than 2 times your risk. Okay, are we clear on that? I want you to mess up, and that's not a high that it broke there, like an entrance here. That's simply me diagramming when you were safe. What you would have hoped for was that Microsoft then soon after does a little bit of a pullback like that, and then goes and breaks that high. Now you could add, and you could now add a third weighting. You could now triple up. That'd be a third entrance. Okay, cool. And then you would raise your stop to there, see? And now your risk is only this on all 3 positions. You would get out of all 3 positions right there. So it's like a huge profit, It's like snowballing. I wonder if there's a better word for it, but it's kind of like snowballing. All right, we've been going for an hour and a half. Let's see if there's any other interesting questions anybody has about trading theory. Chowder says, how do you top up during a fast day trade? How would I see the rebreaks? Okay, that's a good question. And we've covered that like maybe 5 months ago in one class, I remember. So, but let's pull up a day trade of something that ran today and had multiple pullbacks and rebreakouts. Anybody got one in mind? Something smooth, one of the best trades of the day kind of thing. Let's see. Oh, well, you know, I see one for an example. I think XBI. Okay. RWLK, yeah, that might be a good example, but this one's more clear. Let's do them both. Okay, so for whatever reason, this is just pretend, you know, an example, but for whatever reason you're in this trade like down here, or for whatever reason, okay, it goes up, it pulls back roughly, and then it goes all the way up here, right? But then it re-breaks this high right here. Okay, that right there is an opportunity for an entrance to this risk level. Like I will say, you can get in if it breaks 131.70 for, and this is 131.10 roughly, for 60 cents of risk. You know, I'll say something like that. If it breaks 131.70, you can get in for 60 cents of risk. But then you're saying, what if you're already in? You're already in, and here's 131, key psychological level. Let's say you took 20% profits right here, which you should if you were in. And then at 132, you're going to take your next profits, but it didn't get there yet. So anyway, now what you do, and let's say you have, let's see, 60 cents. Let's say you have 100 shares. Okay? Follow me. 100 shares you started off with. It's going up. It's going up. You take 20 shares off here. I'll just type it in so everyone can kind of follow. And then you take 20 shares off there. And now there's a new breakout potentially coming for 60 cents of risk. For other people that maybe you got in early, they didn't get in yet, you know, and they're like, can I get in? And I'm like, you know, you're a little late in the trade, the second chance entry here. I don't know. It's up to you. It's your risk, man. It's your money. But 60 cents of risk to get in at 131.70. So you do the calculation. You have 80 shares. You have how many shares left, guys? Okay. Right. But we're coming up on a spot here where it's 0.60 risk. And let's say you can risk $100 per trade. The last risk was $1. So it came out, you could buy 100 shares. Okay. Now you have 100 risk. It's the same. You have a $10,000 account. $100 of risk. That's 1%. Now how many shares could you buy at 131.70, given that you could get $100 of risk worth of shares on this? We're doing the 1% calculation. Those of you who know the 1% know what to do right now. And then give me the answer. Guys working it out? At 131.70 for 60 cents of risk, how many shares can you buy if your 1% of risk is $100 on your account? The 1% rule. Nope. Well, that's a good guess though, but it's just the equation's backwards. There we go. Cesar and Richard got it. 166 shares. So the reason why they said 166 shares is because $100 divided by $0.6 is 167 rounded, 166, okay? All right, so it's saying, hey, if that happens, you can hold 166 shares. But how many do you have? 80. So therefore, you can get how many more? You already have 80. So how many more do you need? 87, yeah, or 86 if you're not rounding. Yep. So there you go. So that's how you can top off, during something exciting. And I only recommend doing that if it's something exciting. It should have a phenomenal, pre-market word of mouth. It should be something that's got the fuel. Okay? Because you don't want to be getting in for topping off like that. And then it fades. You have to stop out for $100 of loss, and you only made $20 so far or something. So now you're down minus 80. It's going to suck. So you really want to make a good decision when you do those rebuys. Chowder, does that make sense? I think you asked that question, right? Yeah, a hood IPO, that'd be fine. Or a GME or anything that's just like quite hot. The market wins should be all good. We just had a release of tension in the market from Jerome Powell. Wow, we hit 18 range on the VIX. The market's good right now. You'd want all the market wins in your favor, and the sector that it's in is doing well. And there's maybe been some news reports. It's like on CNBC. And it's just a no-brainer. Everyone's talking about it. Maybe it's the number one biggest volume stock traded on the day, et cetera, et cetera, et cetera. Then you're like, oh, hell yeah, I'm topping off at every rebreak. That's basically what we're talking about, topping off on rebreaks. I think, was that the question you asked, Chowder? Did I answer it? Was that what you were asking about? Okay, good. I explained that in 6 minutes. That was pretty good. Your attention deficit disorder is kicking in. Good. Then maybe we'll call it there. Let's see if anyone has an interesting question. Yes, there's a channel called Masterclass Archives in the group, and there's about 50% of these classes are available in there for replay. But if you want to learn in a more accelerated manner for just $7, I've taken all the classes I've ever taught. Some of them even private. I've gotten permission from various private students to edit those private lessons. And I've edited them down to a little 5-minute, 7-minute, perfectly edited and illustrated little lessons in 4K. And I've compiled it into this collection of videos. I call them Market Mastery. It's only $7 a week to access them. You can skip around. You could do the last video first. You could be halfway through one thing and then just get out of it and jump to another thing. It doesn't matter. It's like you access the pool of all the video lessons for $7 for a whole week. And then if you need more time, you got more time. I think most people say like 2 months, so 8 weeks is a pretty reasonable estimate if you wanted to digest everything. But you don't have to digest everything. But some people are completists and they want to do that. But I'll recommend that you study like the pivot point price action chart reading stuff and the risk management stuff. The risk management stuff is like money risk prevention. Like that's very important. It's almost not even that important to study the strategies per se, as to also maybe just study like the day swinging section. You might want to get good at swing trading. There's a strategy in there for channel swing trading. So anyway, somebody dropped the Market Mastery link, and some of you guys should probably enroll in that. It's only $7. When we are doing IPOs like this morning, how do you figure where to buy in, set your stop, etc.? Okay, I think that'll be the last thing I do is show you that. Okay, here we go. So let's say like one that worked out or one that didn't work out. Maybe one of each, huh? Like rely, remember that one? Remember rely? All right, so it starts trading. The very first candle on my chart, it's 2 minutes of trading. Now, depending on when trading starts, there may not be 2 minutes of data in that first 2-minute candle. Does that make sense? Who understands that? It's a funny thing, but you have to piece together some logic. How is that possible that the first 2-minute candle on an IPO might not be 2 minutes of data? How is that possible? Frank says it depends on the time it opens, on the time it starts, right? It doesn't start at exactly, it starts at an arbitrary second during the day. They just go, let's go. It's not at a perfect start time, okay? And if, let's say, it starts at 11:31, then that first 2-minute like exactly, okay? And 60 seconds go by. At 11:32, the next 2-minute candle is going to start. But that first 2-minute candle only has 60 seconds of data in it. You guys follow me so far in that? Because that's a little important. If anyone thinks no, please type no, but not because you're losing concentration, but more because you didn't understand what I said. Okay, good. Okay, good. So then I think I explained that well. So that is why it is important to let 2 candles go by, at least 2 candles, because you want at least 2 minutes of data. And I just think statistically, probability wise, if I give myself 1 candle and then like 15 or 30 seconds on the second candle, that theoretically, I probably am about 2 minutes of data. You know, if you just like do a bell curve of probability, I probably capture about 85% of the situations by starting to take action somewhere in the middle of the second candle on a 2-minute chart. Okay, so it gives me enough time. Then within that time, within those first 2 candles, a range is established, a high and a low. I'm drawing it now. See that? It may not show up there. Tell me when you guys see that. There's a high and a low range that I have established with those 2 first candles. Is that clear? Is a high and a low between those 2 candles that it has established. Okay. Now, should price break the high, we get in. Okay, everybody can go to bed. No, but that's how we get our signal. Okay? Should price break the low, you should probably short the stock because look at that, right? But you can't short IPOs. So in any event, well, you can. Depends on which where you if you have a boutique brokerage account at a place where you can get shorted shares, you might be able to. But in any event, you can't, generally speaking. And so we're looking for the break out to the upside. Okay. If the stock does break down, I have a plan B. Okay. I have a plan B, and that plan B is to switch to the 5-minute chart, not the 2-minute, the 5-minute. And I'm looking for a 5-minute green candle to close above the high of a previous 5-minute red candle. That is probably too much for you to absorb tonight, but that is a plan B strategy. That didn't really happen here on Rely. And if it did at all, it happened way later down here. But confidence had been completely squashed on the stock, and the stock just basically became something that I and everyone else on the stock market was not interested in by that time. It basically missed its chance, if you will. Okay, so that's what happens. That's how we get into. That's how we create our signal. And now, if we go to a stock that did well, an IPO that did well, what was one? Anybody remember? Was there an IPO that did well? Yeah, we could probably try STR. Oh, BT. Oh, yeah, BRLT, right? BRLT, right. Now zoom up a little bit on that. So the first candle actually traded for almost 2 minutes. It was like a minute and 30 seconds. And there was a lot of buying going on. And I was watching the volume. And unlike all the other IPOs, there was a lot of interest in people. There was a lot of demand. There was a lot of volume going on. You can see that on the level 2. If you have a really high speed level 2 setup, you can kind of feel the texture of the difference. You can really feel the difference on that one. It was very strong. And the first candle was almost 2 minutes. So I was almost ready when the second candle drew to get in really if it broke that first candle's high, because it was almost a full 2-minute candle and we were getting a lot of strength. Like you could almost not go wrong to get in, right? However, I think by the time I started to say, everybody get ready to get in, I was around here, the second arrow. And so I said to myself, all right, well, let's just use 14 as our guide. So I said, if it breaks 14.01, go ahead and get in. I didn't know. Maybe this thing was going to go to 50 today. I didn't know that it was only going to go to 17. Or I would have wished that we got in, a little more gain down here. I wish we would have got in down here. And I would just said, get in. But anyway, I said get in at 14. Oh, by the way, that was the other half of the question you asked. How do you know how much risk? It's to the bottom of the range. So that's the bottom of that candle, and we entered at 14, so the risk was this. 14 to 12.7, so we're talking about $1.30 of risk. I know, I was thinking that too. BRLT with no mayo. Okay. Tony? Yeah, perfect explanation, except I missed the information about the risk. That's how you calculate the risk. Yeah. Any questions about that, guys? That's pretty cool, right? And that's what we do. Rinse and repeat, day in and day out, every day, in the morning. We were trading these stocks on their morning momentum breakouts. That's the best time to get in, is like a little bit before the market opens, or right when the market opens, or within 30 minutes of the market opening. These stocks make 90% of their move within the first hour of the day. And then the next 5 hours, they'll make 10% more of a move. So you're going to make most of your money in life dedicating yourself to the first basically hour and a half of trading. All right. Well, I'll see you guys next Thursday night for more learning. And, think about what you want to learn about. With your referral, you opened Webull and got Clove. Are you serious? No. I'll check. That's hilarious. But you know what I did notice is that one of the stocks I got recently from a Webull referral was one share of Apple, motherfucker. I was like, what? They gave me a share of Apple. That's $146. That was pretty amazing. So sometimes you guys can get, it might have been one of you guys. Maybe we get this. I don't know if we even get the same. They should, right? Because they give me 146 and they give you $12 stock. That's not fair. But maybe you guys got Apple one time and I got a $4 stock. You know what they keep giving me is this one called GNC or something. I don't know. It's a really crappy penny stock. They just continued. They keep giving me another $2 of GNC or whatever the hell it is. Yeah. This is a ridiculous. They must have like a millions of those shares they're unloading on everybody. GNC, right? GNC. I hate that. Don't give anybody GNC. God. Yeah. Okay, guys. I'll see you in the morning. That was a good session. Almost 2 hours long. Have a good night. Let's see. End meeting over here. Good night, everybody. See you in the morning. Buenas noches. Gracias.